Bitcoin is finding strength at $65,000. In spite of negative correlated assets, DXY and crude oil both rising, Bitcoin held firm and showed resilience. One strong candle on 9th March told the story, a Marubozu bar signaling buyers asserting themselves. If today, 10th March, sees follow-through to the upside, buyers are making their authority clear. This channel focuses on institutional capital flows between Bitcoin and gold, using structured technical analysis to understand how capital rotates between these two strategic assets. A global financial reset is underway, with governments and major institutions quietly positioning for a future where Bitcoin and gold form the foundation of the next monetary system. If you want to stay ahead of this structural shift, this channel is built to help you understand it early. In today's Bitcoin Institutional Technical Analysis video, you will discover that the tug-of-war battle through most of February 2026 and the early part of March is showing signs of nearing completion, and that balance is tipping in favor of the buyers. By the end of this analysis, we will give you a complete roadmap, specific price levels that tell us whether buyers are meeting expectations, what volatility is currently telling us, and what clues correlated markets are revealing about Bitcoin's next direction. Welcome back. We are BitcoinCapitalGold, a channel for serious traders and investors who want structured technical analysis and capital discipline across Bitcoin and gold. Each day, we evaluate 5 key structural questions. What is the main trend, and are Bitcoin's timeframes aligned? What is Bitcoin's higher timeframe structure? What are the key price levels we need to watch? Is Bitcoin's volatility providing any clues? And are there any geopolitical or other markets affecting Bitcoin's price? Let's dive in. Before we look at today's price action, we anchor ourselves in the higher timeframe structure, because without that context, individual bars mean nothing. Starting at the top, the yearly trend is up, with the swing direction currently down. The structural yearly high remains $125,763 set on 6 October 2025. And the structural yearly low, $15,479 from 21st November 2022. Both unbroken, the yearly uptrend is intact. The monthly trend is undecided, with the swing direction down, aligned with the yearly. The monthly structural high remains $125,763 from 6 October 2025. The previous monthly low of $74,393 was broken on 4th February, creating a new structural monthly low at $60,000 on 6th February 2026. On the weekly chart, the trend is down, with the swing direction also down. The last structural weekly high was $99,000 from 4th December 2025. The weekly low at $60,000 from 6th February 2026. All 3 timeframes aligned, all pointing down. That structure has not changed, but within that structure, buyers are beginning to make noise. If you have been following our recent videos, you will know the dominant range well. If you have not, please watch yesterday's video linked in the description. It will tell you exactly why the 5th and 6th February price levels are so important. What matters today is the equilibrium, the balance point sitting at $66,584. This tells us the balance of power between buyers and sellers. Monday's price action started the day near its low and finished with strength at $68,443. The Marubozu candlestick, visually shown by an almost non-existent lower wick, illustrates how buyers took charge from the open and never let go. From 28th February to date, there is a subtle but noticeable shift. Buyers are progressively taking control above the equilibrium point. The recent 2 days best illustrate this when the 9th March flipped the narrative that sellers were trying to build on the 8th March. You can see that buyers stepped in, took the day, and closed well above equilibrium. We are not a channel that provides signal services, price predictions, or forecasts, but for your benefit, the price zones we give are ideal reference points to place stop losses and take short-term profit targets. On the upside, the current Fibonacci resistance zone sits between $71,329 and $71,780. Buyers tested this zone on 4th March when the high of $74,091 pierced through, but sellers pushed them back and price closed below. As we approach 1 week later, we are watching for a second attempt to challenge and break through this zone. A close above $71,780 would be a meaningful statement from buyers. On the downside, support is holding well. The Fibonacci support zone sits between $63,314 and $63,714. Buyers have defended this zone on every test. Below it, the structural low of $60,000 still remains unchallenged. Volatility is our X-ray vision, an internal measurement that gives us early warning signals when the balance of control is shifting. We use 2 measures: ranges and close to open. Over the last 3 days, daily ranges are rising. Day 7 produced a range of $1,541. Day 8 expanded to $2,518. And Day 9, yesterday, produced a daily range of $3,602, the largest daily range since 4th March. Rising daily ranges accompanied by a bullish close are the early signals of buyers building momentum. The weekly ranges are also telling an important story. From week 8 to week 10, ranges have been rising, an increase of 68% from week 8 to week 9, and a further 17% from week 9 to week 10. We are currently in week 11 and will report on how the full week's range develops in our weekly roundup. The weekly close to open gives us the clearest signal. After week 6's significant selling pressure, weeks 7, 8, and 9 showed tight compression, small negative closes reflecting indecision and building momentum for the next move. Week 10 was a virtual doji, closing just $17 above its open, signaling the market was at a decision point. Week 11 is still printing, but so far it is showing a positive close to open of $3,288. If this week closes strongly net positive, buyers will have made a clear statement. The markets appear to have largely priced in the volatility of the US-Israel-Iran conflict. Let's look at what the correlated markets are telling us. Crude oil gapped up and surged to $120, but the momentum is already waning as initial panic gives way to calmer assessment. Price is currently printing at $88.54, well below $100. Given the ongoing geopolitical tensions, we will continue to monitor this market closely. The Nasdaq opened Monday 9th with a large gap down, yet Bitcoin and gold did not react. That non-reaction is a sign of strength. By the close of the London and New York sessions, the Nasdaq had recovered and ended the day in strong positive territory. DXY rose to $99 on the Asian Open yesterday, but could not hold that level. A strong dollar would historically cause Bitcoin to fall. Bitcoin ignored it. That divergence from its typical negative correlation with the dollar is precisely the kind of behavior that signals underlying buyer strength. Gold remains resilient above $5,000. It is not yet pushing higher, but that $5,000 support is holding firm. Gold is building energy, and when it chooses its moment, the $5,000 level will tell us whether the launch pad is secure. For now, we watch and wait. Here are your key takeaways. Bitcoin's higher timeframe structure remains intact, yearly, monthly, and weekly anchors all in place. Within that structure, buyers are quietly taking control. The equilibrium at $66,584 is being respected. Monday's close sits comfortably above it. Daily ranges are rising. The weekly close to open is turning positive after weeks of tight compression. Bitcoin shrugged off a rising DXY, a surging crude oil price, and an initial Nasdaq gap down. None of them pulled it lower. That is the behavior of a market with underlying strength. The Fibonacci support zone between $63,314 and $63,714 provides a steady floor for Bitcoin buyers to launch from. It may get tested again, but every hold of that zone is encouragement for buyers. On the upside, the Fibonacci resistance zone between $71,329 and $71,780 is the next test. Buyers have attempted it once. A second attempt and a close above it would tell us the next chapter of this market is being written. Every day at 7 a.m. Eastern, we publish institutional-grade technical analysis on both gold and Bitcoin. Gold and Bitcoin are not competing assets. They are strategic levers responding to different financial conditions. Gold is asserting itself as the defining store of wealth of our era, reaching all-time highs against a backdrop of war, inflation, and institutional demand. Bitcoin is simultaneously rewriting its own narrative, no longer simply a speculative asset, but one that serious portfolio managers are beginning to position alongside gold. This channel is built to help you navigate that decision with structure and discipline. If you found this video useful, consider liking and subscribing so you don't miss tomorrow's video. What do you think of the levels we gave? Do you agree? Do you have your own levels you're watching? We'd love you to share your thoughts. Comment below so we can all discuss. A global financial reset is taking place quietly that will affect you and I. At the heart of the new financial economy will be Bitcoin and gold. If you want to be ahead of the curve, follow this channel.